You probably clicked on this video because of the title, and it's true. I did sell all of my QYLD, and in this video I'm going to explain exactly why I did that and how it's been working out for me so far. So you can see over here that I no longer have any QYLD. Right now I only own UPRO and Walmart, and I'm selling covered calls on UPRO, which is a S&P 500 triple leveraged ETF. Let's go take a gander at why I sold QYLD. So if you don't know anything about QYLD, we'll go over here to their website, and exactly what they do is the QYLD is the Global X NASDAQ 100 covered call ETF, follows a covered call or buy right strategy in which the fund buys the stock in the NASDAQ 100 index and then writes or sells corresponding calls on that index. So the way that QYLD does it is that they sell calls on 100% of their assets. You can see they have $6.86 billion under assets up here. So they're selling options, selling covered calls at the money with all of their options. And at first, when I was buying QYLD, I thought this was a great way to make monthly income, which it is. But also, I'm only 28, and I'm trying to also make money. So, watching my account go down in value was kind of demoralizing, even though I was getting paid monthly. So, if you come over here to Yahoo Finance and we look at their max, you can see that from 2013 to now, they're down. I'm not a big fan of that. So they're down a total of 14.5% since 2013. So 9 years, they're down almost 15%. For someone like me who's 28 and really looking to grow my account instead of just cash flow, I decided I learned how to do covered calls myself. I've been doing that for a while, but I was doing it on a different stock. I was doing it on a single stock, and that stock was DraftKings, and that totally just bit me in the butt. So I sold all of my DraftKings, and I decided I'd put all of the money that I had left over into the S&P 500, but the triple leveraged, which is UPRO. So if you look at their stock, since they started in 2009. So it's UPRO, since it's a triple leveraged stock, it tracks the S&P 500, but if the S&P 500 itself goes up 1%, UPRO is going to go up 3%. So it's a little bit, technically it's more risky because it goes up and down more than the S&P 500, but I think it's less risky than other individual stocks because it's still tracking the S&P 500. It's still going to go up, assuming that the S&P 500 goes up, but it's going to go up 3 times as much or go down 3 times as much. But I plan to hold it for a long, long time because history tells us that the S&P 500 is going to go up and to the right. Whereas DraftKings, which is what I was holding, has not that much history, and it's only been trading for like a year and a half. So I lost a lot of money. I have a different video on that, and you can watch that over here in the top right corner, also with a link down below. But if you could, go ahead and like this video if you've made it this far, and subscribe if you haven't already. I'm going to get more into why I sold QYLD and what I'm doing now. So you can see QYLD is going down. Over the last 5 years, it's down 24%, 24.5%, and not liking that. So if we go down to my history, you can see I sold the majority of my shares in December. And I sold all of those, and then I started buying more of DraftKings. And that was a big mistake because they got hit super hard. I've lost like 50 grand, 40 grand on DraftKings. So that's pretty cool. This is not investing advice also, by the way, because I don't know exactly what I'm doing, but I'm sharing my journey. and hopefully eventually it's awesome. But you can see I sold pretty much everything by the end of February, beginning of February. So I ended up buying DraftKings and then lost a ton of money there, and decided to continue with selling covered calls with UPro. Like I said, it's an S&P 500 triple leveraged account. So we'll come down to my history here. You can see when I first started buying was in February, which is when I sold the rest of my QYLD. And I've been just buying and buying and buying ever since then, trying to get as many shares as I can to sell more and more covered calls. So my strategy with UPro, you can see my average cost is $57.26. So I'm down. I'm clearly down, but I'm okay with that because it's the S&P 500 and I know it's going to go up eventually. Okay, I don't know it's going to go up, but history tells me it's going to go up, and I'm comfortable taking that risk instead of taking the risk like I did with DraftKings, which you can tell is kind of a sore spot for me. So go ahead and smash the like button for me to feel better, and also for the YouTube algorithm if you haven't already. And we'll get into exactly my strategy with selling options on UPro. So I'm not selling anything at the money because my average cost is around 57. So I'm going to come to sell call. What I'm doing is every month I'm going out about 4 or 5 expiration dates, and I'm going up to where my chance of profit is about 90%, which you can see. So there's 95 and then 89, so almost 90. So I'm coming up around there, and then I'm selling a call for 1 month out. So it's basically paying me the same as QYLD because I'm getting paid once a month. But I'm able to do it with, since I have 300 shares right now, I'm able to do 3 options. So I could do it, they're kind of staggered. So I get paid, we'll say July 1st, and then I only sold 1 option here. And then the next week I'll sell an option for July 8th, and then the 15th. And then I take that premium and then I buy more shares. So I'm reinvesting my dividends just like I would with QYLD. But I'm not selling myself short. I'm able to have the underlying stock grow, where QYLD tells you that basically the upside of the stock is very, very limited because they're selling it at the money. So if I were selling at the money on UPro, I'd make a lot more, right? I'd be making a lot more. I'd be making $330 an option. I also don't really want to sell my shares at the money because I would lose a lot of money at that. So I'm not doing that. I'm going up where my chance of profit is very, very high, and I'm still making good money. So that is the biggest reason that I sold QYLD, is I still wanted to see my money grow, still wanted to see my account grow, and QYLD really, really limits that ability. So I sold it. It's the same with RYLD and XYLD. All of them really limit your upside potential, where I feel like selling options on UPro it's basically the same as selling options on SPY, which Brad Finn does a good video on selling options on SPY and kind of why his thought process on it. And I really like that video. I'll link that down in the description as well. But this is kind of doing the same thing, but it's triple leveraged, so the options are a lot higher. And if you haven't seen my video on QYLD and don't know what I'm talking about, go ahead and watch this video right here.